Welcome to Personal Finance Deep Dives, where we help you make your money work for you.
All right, today we're diving into a topic that could seriously change your financial life: banks versus credit unions. Now, on the surface, they look pretty similar, right? They both have checking accounts, savings, loans, the usual stuff. But trust me, underneath it all, they are built on completely different foundations. And that difference, well, it can have a huge impact on your wallet.
So, let me start with a question that, honestly, most of us never even think to ask. Who actually owns your bank? The answer to this one question is the key to everything. It's why they have the fees they have, the interest rates they offer, and even why the customer service feels the way it does.
And that brings us right to the core of it all. The biggest difference between a bank and a credit union really just boils down to one simple thing. One is a business designed to make a profit for investors, and the other one, well, it exists for a totally different reason.
So what is a credit union? By definition, it's a not-for-profit cooperative. And those are the magic words right there. Not-for-profit means they aren't trying to make money for outside shareholders. And cooperative means it's owned and controlled by the people who actually use it, the members. And that's not just some nice-sounding marketing talk. It dictates their entire business model.
Let's look at this side by side, because this is where it all clicks. A bank is a for-profit corporation. It's a business, plain and simple. It's owned by investors and shareholders, and its number one legal job is to make them money. A credit union, on the other hand, is owned by its members, the people with checking and savings accounts. That means its main goal isn't profit, it's service. Any extra money they make gets funneled right back to the members.
And this completely changes your relationship with your money. It means you actually have a say. Every member gets one vote for the board of directors. It doesn't matter if you have $5 or $500,000 in your account. And that simple fact brings us to takeaway number one. At a credit union, you're an owner, not just a customer.
Okay, so being an owner sounds great, but what does it actually do for your bank account? How does that not-for-profit thing translate into actual money in your pocket? Well, this is where it gets really good.
Because credit unions return their profits to members, you see the payoff directly. Let's just look at some national averages. For something like a 5-year CD, you might see a rate of 2.66% at a credit union versus 1.83% at a bank. That's a huge difference. And the same goes for loans. You'll generally find lower rates on car loans and mortgages. Over the life of that loan, we're talking about saving thousands of dollars.
And it's not just about the big interest rates. It's also about dodging all those annoying fees that just seem to chip away at your balance. You know what I'm talking about. Since credit unions aren't trying to squeeze every last penny out of you for shareholders, they usually have way lower or sometimes even zero monthly fees, smaller overdraft penalties, and just less of that nickel and dime stuff.
So it's a pretty simple formula, really. You get better rates on your savings, you pay less on your loans, and you get hit with fewer fees. It all adds up. And that brings us to takeaway number 2. Credit unions are just structured to put more money back in your pocket.
But the difference isn't just about dollars and cents. The whole vibe, the whole culture of a credit union is different, and that's because its purpose is different. We're talking about a shift from focusing on transactions to focusing on people and relationships.
This quote right here, it just nails the feeling so many people have with big banks. It's so easy to feel like you're just another account number lost in some giant computer system. The entire credit union movement was basically born as an answer to that exact feeling.
So what does this people-first idea actually look like? Well, it means you get more personalized service from people who aren't just trying to hit a sales quota. It means they're often deeply invested in the local community, supporting local projects. They put a big emphasis on financial education for their members, and don't forget, you have a real voice through those voting rights. It's just a totally different game. And it all comes back to that first principle we talked about. Their reason for being is different. That brings us to takeaway number 3. The focus is on people, not profits. And that mission influences everything they do.
Okay, so the philosophy makes sense, the benefits sound pretty great, but let's talk brass tacks. I want to cover the practical questions that always come up when you're trying to figure out if a credit union is actually the right move for you.
And here it is, probably the single most important question you could ask. We all know about the FDIC sticker on the bank's door, but what about credit unions?
Is my hard-earned money just as safe? The answer is an absolute 100% yes.
Let me make this super clear. You've heard of the FDIC for banks, right? Well, credit unions have their own version called the National Credit Union Administration, or NCUA. It's a federal agency that provides the exact same insurance for the exact same amount, up to $250,000 per depositor. And most importantly, just like the FDIC, it is backed by the full faith and credit of the U.S. government. In terms of safety, there is absolutely no difference.
So let's just bust that myth right here and now. That brings us to takeaway number 4. Your money is just as safe and insured in a credit union as it is at a bank. Period.
Now, you might be thinking, okay, but aren't they exclusive or hard to join? And yeah, back in the day, you might have had to work for a specific company or be in a certain union. But those rules have really loosened up. A lot of credit unions are now community-based, meaning if you live, work, or even go to church in a specific county, you're in. It's way easier to find one you can join than you probably think.
But look, let's be real. No one solution is perfect for everybody. You have to be honest about the trade-offs. The pros are obvious. Better rates, personal service, that community feel. On the flip side, a smaller credit union might not have as many physical branches as a megabank, or maybe their app isn't quite as cutting edge. It's really about weighing what's most important to your lifestyle.
All right, let's tie this all together with a quick recap of our 4 key takeaways. Number 1, at a credit union, you're an owner, not a customer. Number 2, they're designed to put more money back into your pocket through better rates and fewer fees. Number 3, their whole focus is on people, not profit. And number 4, the big one, your money is absolutely just as safe and insured.
So, I'll leave you with this final thought to chew on. Now that you know the difference, now that you know you have a choice, is it time to start banking with an owner's mindset? Is it time to choose an institution that works for you instead of the other way around?
That's all for now, folks. Please like, share, and subscribe for more like this.